Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 4th of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not indicative of future results. First off, I want to remind everyone that there's an AMA at noon Central, 1 Eastern time here in the U.S. tomorrow. The link for that can be found on my Twitter feed, twitter.com/futurestrader71. The AMA will cover questions, just general questions, but also during these AMAs, I like to look at trade setups, edges, things like that, whatever's relevant to the conversation at the time. So I look forward to you joining me. There's a link on that registration page where you can pre-submit your question. I cannot keep up with the questions during the conversation. There are usually about 800 or so, 800 or 900 viewers. And so I prefer to get the questions ahead of time and organize them, have someone organize them into slides so I can go through them as efficiently as possible. Back to business. Overnight, VW announces that it has found irregularities in its CO2 levels in as many as 800,000 vehicles following an internal investigation. Most of these vehicles run diesel engines. This is above and beyond the scandal that has already occurred for VW in the last month or so. So this is some more pain for VW and its investors. Tesla was up 10% in after-hours trade after the company announced yesterday that it expected to deliver 17,000 to 19,000 vehicles in the fourth quarter, outpacing Wall Street consensus. U.S. auto sales came out yesterday at the highest level in a decade. I think I saw a news report that said that the auto sales are the highest in 15 years. Thanks to low oil prices, low financing, and a general good feeling by Americans towards their pocketbook. Iceland's central bank raised its benchmark interest rate 25 basis points to 5.75%. That's a shot across the bow for all central bankers. Again, we're eyeing out a potential December adjustment. If you have looked at the treasuries recently, you could see that the market is starting to take positions in the possibility that we would see a liftoff in December. I still think the chance is incredibly remote, but what do I know? I'm just a day trader, right? So other than that, we had ADP, U.S. ADP employment change came out at 182,000 versus 180,000 expected. September trade balance came in better at negative 40.8 billion versus negative 41 billion. And then other than that, pretty busy calendar today. We have ISM services this morning at 8:45 Central, 9:45 Eastern. All times are Central. Central's 1 hour behind New York. 54.5 expected at 9 o'clock. ISM non-manufacturing 56.5. We have the DOE U.S. crude oil inventories at 2.25 million. Distillate inventories at negative 2 million. Gasoline inventories at negative 1.125 million. And as far as speakers, we have Fed's Harker, who started speaking about an hour ago. But we do get Fed's chair Yellen on bank regulation before the House panel at 9 Central, and then we get Fed Speaker Dudley at 1:30 Central. And in aftermarket, we have earnings from Facebook and Qualcomm. Let's see what happened yesterday versus what was expected. So let's pull our trigger chart just so we can see the details. Yesterday's primary hypothesis, responsive buying back to the 2097 even. And then we were looking for, because the high from the prior day was weak, we were looking for a potential test of yesterday's high, and then the expectation from there. So Hypo 1 was a responsive action back up into the point of control and into the prior high, and then the expectation was for it to peter out and then fall back in and just stay in here. That was the expectation once the primary target had been hit, which would have been the above yesterday's high. The target above there was 2103.50. This point of control from the 21st of July, and it did end up pushing to it and tagging it. The market continued through. There's a lot of volume back here on the composite that is likely, that yesterday was expected to keep us at bay, keep the buyers at bay, but there was a push. There's some pretty good delta on the push up yesterday. Buyers are definitely in control. Were definitely in control yesterday. The overall profile, even though it was it looked like a normal variation day, but we did hit 2 times the IB. I'm not classifying it as a trend day simply because the market ended up closing near the mid. It did not, a trend day, the way I'm classifying trend day for my statistics, because you have to define it some way. One of the criteria is it needs to finish in the upper quarter of the day, and generally it leaves us with a pretty weak high. Yesterday's high had an abrupt taper on it, but it still had a taper nonetheless. It left us with 3 distributions. This is getting messy, this drawing. It left us with 3 distributions, actually 4 it looks like, and it ended up finishing in the middle of the distribution with the point of control right there at 2103. Note the point of control is right in line with the point of control of the 7/21 date, meaning that what this is indicating is that the market is accepting these higher prices as value. So tough times for sellers again. I warned about that a couple weeks ago, telling sellers that it's really important to lighten up or hedge any short positions. But we've, it was really winding up to go this way for quite some time. So here's the high volume area. So you can see this is the high. This is the all-time high at 2117, and we have a final high volume node on the composite right up against the area we're in. I'm expecting this area to entrap the action in here for a bit. The market has extended itself quite a bit. It's pushed right through and up, and continuously and relentlessly rotating up without much pullback. For a normal auction to take place, the normal behavior of an auction is that it rotates up, then it rotates up, therefore advertising prices higher, seeking what? Seeking sellers. And then when it finds sellers, then it takes a break by rotating down and advertising lower prices to seek out buyers. And it has not done that incredibly well lately. So the expectation is for consolidation today, going into tomorrow's Draghi stuff. So I'm looking for today to be a resting day. We are pushing up against the high end of the profile. So the idea here is the trend is the trend has momentum, right? The trend is a natural. I've talked about this before. Nature works in cycles, and the nature of things is that they continue to move. Newton's third law of motion. An object continues to move in a direction that you set it in until it confronts an opposing force. And what the market is showing is that it is not finding that opposing force just yet. The rotation down yesterday was 10 points. On a 20 some odd point day. So that's fairly significant. We used to do 10 points as the range for the entire day, especially on a buy side. To have 20-25 point days, that really means that there's a lot of business that's being done here. The internals show the strength as well. And so this is a well subscribed run up, as opposed to just running up on thin air by squeezing out shorts. This is a legitimate push. Earnings have been pretty strong, and so overall we expect this. However, like I said, the primary expectation today is to push and again chop around in here. That's the primary expectation, but do not be surprised or do not be disappointed or do not bet your home on the idea of buying at the open. That's not what these trader bites are for. Trader bites are intended to go over the context that leads up to what we think is the primary idea, the big trade idea of the day. But the big trade idea does not work all the time. In fact, it works about 3 out of 4 times. And that's good enough to make a pretty good living at this. So even though we expect, statistically, we expect the market to rest here for several reasons, given the one-time framing, the number of days of one-time framing, given the high volume node that we have up here. The expectation, the probabilities are on the side of resting and then possibly seeking buyers by advertising lower prices and then getting the energy to go up to 2117. But it doesn't mean that it's definitely going to go sideways. It could continue up. I'm just simply stating the highest possibility. Anything is possible in the market. I'm not trying to sound like one of those that sits here and gives you every eventuality and says, see, that worked. That's not the idea. The idea is to let you know what's more likely, but not what's definite or guaranteed. I cannot guarantee anything for myself or for you in this market. The overnight profile is as boxy as they come. This is a very odd shaped profile. The market popped up overnight. The Shanghai index was very strong overnight. I think it finished up 4.3% or something. And then the market retraced it, and then on the services PMI in Europe, as I said, the numbers were very strong. You could see the pop up, and then the market pulls back again. So what we have is a market that kept trading between 2101 and 2108 repeatedly, resulting in a wide boxy consensus. There's no unfair high or unfair low. If you look at the low, it's weak. If you look at the high, it's weak. This is an indication. This is a possible indication of disagreement between the buyers and the sellers here. All the other indication is that the delta is completely flat on the overnight session, despite the fact that we are much higher from the open to where we are now. The delta is really flat. It's the participation overnight was full of disagreement in a 7-point range, and is not giving us very much other than to say that there was a fair amount of volume overnight so far, 161,000 versus 145,000 or so as the point of control over the last 20 overnight sessions. And so there's a fair amount of energy here, but the overnight session is just telling us that the market has not given up any space to the downside and is holding up high and in the upper part of value. So it is likely that it'll chop on the open, test that overnight high, and push through before it falls back in. Again, that's the basis for Hypo 1. Okay, so it's 8:15 here. I don't want to go too much into stuff. There's not much more to share, and I won't cover other products. I just want to say that, again, the idea with these trader bites is not to give you something to trade every day. The idea is to get you to think about the market as an auction, because that's what it is. And then the other thing is to understand that this approach, I've been using this approach for over 10 years now. It has sustained me as a trader. I've been doing this professionally for 15 years, and it's not something that you've seen change. Those who've been following from the time I came on Twitter in 2008 have probably noticed by now that I pretty much don't change anything. I don't change it for HFTs, algos, for the high volatility in 2008, for the dead run in 2011. It's all the same process over and over and over. And you can create a career out of this, in my opinion, and I have. And so I am sharing this as a way for you to learn to fish for yourself, as opposed to me giving you some levels in a trade or a setup and saying this is what to do. That's the goal of these Trader Bites, and I hope you're getting something out of it. Good luck today, and I'll catch you tomorrow. Don't forget about that AMA at noon Central, 1 Eastern tomorrow. Take care. Bye.